This program is proudly brought to you by Telecom Limited and Daytech.
Taxation in Papua New Guinea has been critical to PNG's development and has come under much scrutiny and debate since independence. Recently, in an effort to modernize PNG's taxation regime and ensure equitable tax contributions, the PNG Parliament passed the Income Tax Bill to replace the 66-year-old Income Tax Act of 1959.
And you see, the tax system, there's certain principles, and three of them is a tax system must be simple, it must be fair, it must be equitable. And in that review, we saw that the 1959 law is cumbersome, like over 300 pages. It was very complex for our simple people. So our SMEs, for example, who can't afford an accountant to do their tax work, were becoming non-compliant because accountants are quite expensive. So simplifying the tax system, reducing down to half of those chapters, I am very optimistic that it can help in the compliance space and also look at modernizing the entire system.
Very quickly, the amended Income Tax Amended Act before us should also be seen in a wider context. The ITA provides for the substantive provisions of our tax laws. Yes, the Separate Tax Administration Act provides for the administrative provisions of this Act. This particular legislation was actually passed by the previous government back in December 2017, but unfortunately has been dormant until this new income tax comes into effect. But both legislation will work together to provide a more modern tax administration system backed by regulations and, of course, a public ruling system to provide further clarification.
Joining us for discussions is Ms. Anna Kapil, a lecturer of economics at the School of Business and Public Policy at the University of Papua New Guinea, who, with Professor Stephen House, director of the Development Policy Center, published a paper, How Could PNG's Income Tax Schedule Be Improved? Anna Kapil, thank you for joining us.
Thanks for having me.
Now, firstly, Anna, based on your paper, you mentioned that income tax raises about 4% of gross domestic product. How does that compare to other countries?
Yeah, so before I answer the question, just a special acknowledgement to Professor Stephen House, which we co-authored the paper together. So yes, based on our paper, we've seen that PNG's share of income tax to GDP is about, the average is about 4%. If we compare that to, if we do an international comparison, so if we compare that to the developed economies, the average is about 8 to 9% of GDP, which is understandable. They're developed economies, so they get a lot from taxes. Most of their population is also in the labor force, working. And if you compare that to other developing economies, just like PNG, the average is about 2%. So we can say that PNG's average is double than the average with similar countries or similar economies like PNG. So if you look at it, it's like PNG, we have very small people employed in the labor, in the formal employment. So small part of our workforce is employed in the formal sector. And it has been decreasing since independence. So from about 6% to just 4.5% in 2019. And we can see that like this small part pays a lot of money as income tax. We contribute a lot to the nation's GDP. And indeed, this shows that our average is very high, double the normal average for other developing economies.
Before we move on to further discussions, I'd like to get your understanding on what is an income tax schedule?
So an income tax schedule is just, it's just a schedule that shows different tax rates and different income brackets in which these different rates are applied to. So for PNG, we have the tax-free threshold, which is basically 0% of tax. That stops at 20,000 kina. And then our minimum non-zero tax rate would be is 30%, in which those who earn in excess of 20,000 kina to 33,000 kina, they pay 30% of that excess as income tax. And yeah, the top threshold right now is 250,000 kina. So those who earn in excess of that pays this excess about 42% to income tax. So yes, basically the tax schedule just displays these different tax rates and income brackets. Yeah.
How has the income tax schedule changed over time in Papua New Guinea?
Yeah. So based on our research, we've seen that since 1975, the tax schedule for PNG has changed. Has gone through about 17 changes so far, and the tax schedule today is much different from what it was like back then at the time of independence. So back then we had about 12 different rates, and we didn't have any tax-free threshold. The lowest rate was around 4%, and the highest was 50%. But right now we have about 4 different rates, if we include the tax-free threshold, and 5. And yeah, the highest is at 42%, and our minimum non-zero rate is at 30%. So really big difference.
In your paper, you identified several major changes. Could you elaborate on them?
Yeah, so of those 17 changes, there are both major and minor changes, and then we've identified, we've mainly spoken about, discussed the major changes. So the first major change was in 1987. That is the first time in which PNG introduced the tax-free threshold. So at that time, those who earn up to 2,000 kina annually, they were exempted from paying tax. And the minimum non-zero rate at the time was moved up to 15%. So when the government introduced the tax-free threshold, they kind of abolished the lower rates. So like 4, 8, and 12%, those 3 different rates were abolished. And yeah, so so from paying 0% in tax for the first income bracket, those who earn in excess of 2,000 kina would pay 15%. Yeah, so, and also the tax rates are reduced to just 9. That was the first major change. The second one was in 1993. It was a very radical change, but very short-lived as well. So in 1993, the government wanted to simplify the tax system. They introduced 5 different rates, and also the top minimum rate was around 28%. So historically, it was the lowest top tax rate. But however, it was short-lived because at the time we were facing some fiscal issues. So in March of 1994, the government decided to do a supplementary budget in which they've changed the rates again by reintroducing higher rates. But it wasn't that really high because the top rate was at 35%. So 7% increase from the 28. Since then, the next major change was around 1998. So these changes, the government restructured the tax schedule again to the one similar to the pre-1993 schedule. So a lot of rates were reintroduced. We have 7 different rates, much higher rates were introduced. So the top tax rate was around 47% in 1998. And then again, in 2001, there was another major change. The government decided to simplify the tax system. So moving the rates back to 5 different rates or bands, and also increasing the tax-free threshold to 5,000, so 5,000 kina. That was done. And then between 2006 to 2008, the major changes at the time was just the top threshold. So the top threshold or the maximum threshold was around 95,000 kina, but then they increased it to 250,000 kina. At the same time, the top rate was about 47%, and they've increased they have reduced that to 42%. So, which is the same as today. So since 2008, we can say that there hasn't been a lot of changes in the top threshold and the top rate. Also, we've seen that over time, as the government kept increasing the tax-free threshold, what they did was they kept cutting down the lower rates, lower minimum non-zero rates. So it was kind of a trade-off. And then the most recent major change was in 2023. So since 2008 up till 2022, what the government did was just increasing the tax-free threshold. So those were the only changes in the income tax schedule. But in 2022, it was during COVID, right after COVID, and everyone was recovering. The economy was recovering as well. So the government wanted to help the low-income earners. And at that time, they have temporarily increased the tax-free threshold to 20,000 kina. However, no permanent changes were made yet. Till 2023, the government decided to make that change permanent. So now we have our new tax-free threshold at 20,000 kina. And also the lower rate was abolished. So 22% was the next rate after the tax-free threshold. It was abolished, and now we have the 30% as the minimum non-zero rate after the tax-free threshold. So with our analysis, we've seen that what the government basically did is it was just increasing the tax-free threshold, but to compensate for that, it kept abolishing or removing the lower tax rates. So right now we have 30%, which is really high.
I mean, would you say Papua New Guineans overtaxed internationally and regionally as well?
Oh, definitely. So if we look at regional wise, PNG has the highest minimum non-zero tax rate, so which at 30%. And if we do like an international comparison, obviously we have to compare against similar, economies like PNG. So for middle income countries, the average rate for minimum non-zero. So let's just focus on the minimum non-zero tax rate. So for middle income economies, the average is around 12%. And for PNG, our average is 30%. Whereas if you look at other economies, like low income economies similar to PNG, the average is around 15%. So PNG, our minimum non-zero tax rate is 2 times the average of other low-income economies. So we are indeed overtaxed.
Are there recommendations that you're proposing in your paper that can improve this current situation?
Yes. So one thing that we've seen is that when we were doing these international and regional comparisons is the minimum non-zero tax rate has been changed a lot, and right now it is at its highest, 30%. So imagine if you're a person who was earning below 20,000, you were not paying any tax at all, and then you get promoted. If you get promoted, you are paying 30% of that excess income to income tax. So this is a big change, and sometimes it may be disincentivize workers to work more or do well and get promoted. So what we are proposing, or what we've recommended, is that we think it would be best if the PNG government considers reducing our minimum non-zero rate. 30% is too high regionally and internationally. So maybe reducing the non-zero minimum tax rate to less than 30%, maybe 15 to 20% would be good.
Now, to what extent were the recommendations of the 2015 Tax Review Committee implemented based on your research?
So the Tax Review Committee, so in 2015, they proposed that the government should increase the tax-free threshold, but they proposed a gradual increase to from 15,000 kina, then eventually up to 20,000 kina. At the time, I believe the tax-free threshold was around 12,500, if I'm not wrong. So so they proposed a gradual increase from 12,500 to 15, and then 20,000 kina, and I believe that's what our government achieved. So that's a good thing. Also, So the main aim of the tax review committee was to help, especially the low income earners. So yeah, one way of helping them is by increasing the tax-free threshold. And another one is they want, another recommendation was to have a simplified tax system. So they proposed a tax band of just like up to five different tax rates. And PNG right now we have like, if we include the 0%, which is the tax rate threshold, we do have the 5 different bands. But the tax review committee recommended a minimum non-zero rate of 20%, in which the government did not consider the recommendation. So right now we have the 30%, very high minimum non-zero rate. Yeah.
I mean, it's a good segue into my next question, and it's in regards to the recent amended Income Tax Act. Now, according to the government, it represents a comprehensive modernization of the country's tax framework. Would you agree that it somewhat simplified it?
I believe so. I think it is for the better of our country, and it is a great progress for us because we still have a lot of issues with tax administration and all that. And like if you look at other countries, like I believe developed nations, USA, Japan, they are where they are now. Their institutions, their tax institutions, they are the way they are now because their legal systems, their acts, their laws have been amended. They're going through changes and refinement over time to take them to where they are now. Our institutions is still weak. So we are a developing nation. It is still weak. And in order to strengthen our institutions, I will focus on our tax institution, the IRC tax collecting unit, the tax administrative unit. We need this law to be updated because right now we are using the 1959 Act, which was when we were still under colonial administration. So it is a bit outdated. So I believe, it is really good for us to update these laws and help the tax administration aspect of our country and just to strengthen the institutions of our nation.
Now, based on your paper, what are the attractive features of the current income tax regime?
So one of the most attractive features of income tax is its progressivity. So progressivity mainly means that we want to take from the better off in the society and take more from the better off and give to those who are not doing so well in the society. So taxation is one way of doing that, one way of redistributing income or wealth in a society or in the world. And if we look at like egalitarian societies in Europe, they have very, very high tax rates. They're developed economies, they have very high tax rates. And you can see that if you look at their inequality level, they have the lowest level of inequality in the world. So that is the attractive part of our income tax system. We have a progressive income tax system. So our paper, we also tried to measure the progressivity of our income tax schedule. And with the limited data available, we used a method called the Reynolds-Molinsky or RS index method to just measure our tax progressivity. We've seen that PNG's income tax schedule has been progressive since 1987. And that is mainly because in 1987, the tax-free threshold was introduced. So progressivity, basically, you want to take more from the better off and give to those who are not doing well. So if we introduce the tax-free threshold, that means that we are helping more of those who are not doing so well in the society. So indeed, we've been progressing well, but PNG was the most progressive in 1987. Even though we are still really progressive, it's not as high. So our index is not as high as it was in 1987.
Now, recently, the Marape Rosso government, through the Internal Revenue Commission, has announced the goods and services tax exemption on 13 essential goods and services. Do you think this will adequately alleviate the cost of living pressures currently felt by Papua New Guineans?
I believe to an extent it will, but not necessarily because, cost of living pressures. If you look at essential goods, it's just one part of cost of living. We have to also look at accommodation. Rental rates are really, really high. And I believe it will help like not just So our people, we were just focusing on the formal sector because those are the people paying income tax. But GST helps everyone. Okay, it helps everyone. So I believe, yes, to an extent, it will help us save maybe 100 or 200 kina from buying those essential goods, but it won't have a lot of impact. So on like the general cost of living, if you look at those living in the cities, especially the taxpayers, those paying income tax, that's what who I'm referring to. Still, with a minimum tax like 30%, it's still too high, and saving that 10% on the essential goods only, it's not that much in what they are contributing to income tax. It's not that much. So, yeah, I believe to an extent, it is a great initiative by the government, and it will definitely help everyone in the society. So, yeah.
Ms. Anna Kapil, thank you for joining us.
Thank you for having me.
Well, viewers, that ends this episode of Infocus. Do join us again next week, Monday, on our regular time slot of 7 p.m. Till then, bye for now.
This program was proudly brought to you by Telecom Limited and Daytech.